And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, traders, and welcome to another fascinating week in futures trading. This is the market forecast for Monday, July the 18th. I'm John Hoagland. Thanks for trusting me with your time. Hope you had a nice and restful weekend. If you did get yourself in trouble, in case you didn't know it, today is National Get Out of the Doghouse Day. So today's the day you get to get out of the doghouse. If you are already in the markets, hopefully things are going your way. And as always, we're going to be focusing on context, risk management, and exercising patience in our trading. This morning, as far as economic numbers, the NAHB housing market index is due out. That's really the only thing that we're waiting for as far as economic numbers are concerned. This week, a lot of focus on housing. Tomorrow, housing starts and permits. Existing home sales on Wednesday, along with the petroleum status report. Thursday, jobless claims as usual, Philly Fed Manufacturing Index, misleading indicators, and nat gas. We have a whole bunch of T-bill and note announcements and a couple of auctions on Thursday. And we round out Friday with the PMI composite flash, an indicator of what the next PMI is going to look like. As far as things that I'm focusing on this morning, of course, we've got earnings. Earnings is kicking into high gear this week. Today's earnings, the Bank of America misses on both, Goldman Sachs beats on both, and we're waiting for the IBM earnings after the close today. Stocks are set to open higher, as I'm sure we're all aware, as speculation points to only a 75 basis point rate hike next week. We will not be having any Fed speak this week or until after the FOMC meeting. The Fed blackout is underway. U.S. stock indices are ready to test extremes near the 5-week high of the balance area. We're going to see that in the charts here this morning. Earnings kick into high gear again. We've got Netflix and Tesla earnings, kind of the stars of the week, on Tuesday and Wednesday, respectively. Tuesday after the close for Netflix, Wednesday after the close for Tesla. And unfortunately, crude prices have firmed up after an unsuccessful visit to Saudi Arabia by our president with no meaningful outcome. Unfortunately, that is the case. The VIX actually higher this morning by about 3% at 25.04. Dollar index. Hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome on the market forecast, the market recap. And make sure you subscribe to our YouTube channel. That way you can get notification when we do go live. So it's a pleasure to be with everybody this morning. We've got, yet again, another fascinating and challenging week in futures trading ahead of us. Got to say good morning to everybody. Shaw's the first one in the room. Shaw, you won the prize this morning. Brian, good morning. Tachyon, good morning. Brown, good morning. Charles, chilling with Dylan. Kevin Johnston, Dr. VJ, Dimitar, Scott Saw, and he conquered. Tachyon had a little small loss last night. Nothing tremendous. See what you can find in the RTH, like you mentioned. If not, your goal is to survive to trade another day. Terry King, good morning. James Patrick, no cookie for you this morning. Well, I'm sure you'll be all right. Zureen, Alfred, George, good morning. Kevin Johnston, crypto looking shorty today. Most are hitting resistance points. Bill Phillips, Kevin Johnston again. See what Tesla does today. Three Lions, Sarah Hall, good morning and prayers and love to you as well. Rusty Golfer, my spirit animal. France, good morning. Grim Reaper Trader, good morning. Jerry is awake. Hopefully I am too. DA, Frederico, Isaac, James Swan. No. Just struggling to correct it. You know what you're doing. It always seems to be the way, right? We know what to do. It's just so difficult to do so. James, sorry to hear about that, but get back up on the horse. You've done it once. You can do it again, and you'll probably have a better outcome the next time you get to that pro account. Rob T, good morning. Unicus, good morning. Quote of the day: the market will force you to change if you don't, and it's change if you don't, and it's painful and disheartening. Yeah, the markets are, it seems simple, right? We buy, we sell, we make money, right? But it's just not that simple. The markets are going to find your weaknesses, exploit your weaknesses. It's up to us to find those weaknesses and take their power away from us, and at the same time strengthen our strengths. Lay into your strengths. Don't forget about the strengths. Andy, good morning. Bob Rudder, good morning. Buenos dias. Isaac, Denise, Vince, good morning. GD, good morning to you. Hope you had a nice weekend. GZ, Shaw Cunningham. No one really thought the Saudis were going to do anything, right? I'm surprised people are surprised by this. Yeah, we kind of didn't really expect much from it anyway. I mean, they pretty much told us they're almost at capacity anyway, right? Toph, good morning. Emmanuel, hi. Nav, we will get it, James, yes. Yep, Isaac, yep. Nice to hear the bass voice. Well, I hope it's calming for you. James, yes, love the support. Yeah, we are here. I mean, that's our goal. Is we know that it's a bumpy road, but it's your eventual success that we are all seeking. 600 away from getting funded. Hope I trade well today, Josh. One suggestion: don't focus on the profit target. If you focus on the profit target, you will not be focusing on your process. Take the trades you would trade if it didn't matter, and you will get there. If it doesn't happen today, just stay in your process. And we're looking forward to seeing you getting there. And I know you are too. But if you focus on the money instead of finding good trades, we tend to step away from our process and our strategies just to try and get to that number. I can't tell you how many times I've had a financial daily goal in mind, and I've been within a couple of ticks in it and absolutely ruined it, blew it up. So just focus on the opportunities as they come to you, asymmetric opportunities, the things that you're looking for, and we're looking forward to your success. Let us know when you get there. Don't try and push to try and get there fast. Tony, good morning, Master. Emmanuel, Ron, good morning. Patrick, you have to agree pretty much every economic report. I'm always surprised people are surprised, right? Haggle Matters, first day of the combine. Relax, take your time, let the market come to you. I know it's kind of a cliche when people say that, but you know what I'm talking about. You know when the market just aligns with the things that you're thinking. Those are the days that you're gonna do really well. If things aren't lining up, if things don't make sense, you do not have to trade. We're all traders. Doesn't mean we always have to have a trade on. Sometimes the best trade is no trade. Just take your time, Haggle Matters. It's going to take a little while to get over the fact that now there's skin in the game. It's one thing trading on a simulated account. There's no rules, no accountability, no consequences. Now there's rules, accountabilities, and consequences. Don't let that change your strategy. It's easy to make those hard decisions when it doesn't matter. It's hard to make those hard decisions when it does. Just take your time. All right? Okay. I think we've taken care of all of our early business. It's back to business as normal here on the Forecast Recap Coaching and Make Hope Money. Today we will be having group coaching again at 1 p.m. Central. Here is the link so you can get registered and join me again at 1 p.m. Central. And if you have questions, bring them. Put them in. You can always email them too, jhoagland@topstep.com. Give me a chance to prepare some answers, but it's okay. I always enjoy the challenge of answering questions on the fly. Now, nobody knows everything, and I know I certainly don't. One of the beauties about the group coaching is I get to learn too. If something I don't know, I'm going to tell you, and we're going to have the opportunity to learn together. Okay, S&Ps. Let's get the charts out. Let's get our knowledgeable trader in the front of our mind, and let's take a look at what's going on in the markets today. So S&Ps. We had a nice rally on Friday. Unfortunately, it still seems like some of our rallies are rather hollow. We lost 13,000 estimated open interest on lower volume on a move to the upside, but we're still largely in range and in balance. We do know that we've got earnings accelerating. We know that we've got the FOMC meeting a week from Wednesday. People are going to start posturing and hedging for the FOMC meeting just in case anything unusual happens. Now we seem to be looking to test extremes on the upside of our balance here. We've got 1, 2, 3, 4, 5, maybe about 5 weeks where we've been in a range and we are just kind of holding back and forth between that range, and we're getting an opportunity to test that upper extreme this morning. Investors seem kind of cheery, looking at a 75 basis point rate hike in a week and a half. Who knows what's going to happen? Again, the rallies that we've been seeing have been rather somewhat hollow. We're not bringing in new business. We're evaporating old business on rallies, and that's not necessarily indicative of a healthy upside auction, but that could all change today if we accept outside of the area of balance that we've been in. Balance rules. We fade the extremes of the known balance. We would be selling up here, looking for a rotation back lower towards the center of the area of balance. Balance rules. We buy the low of the extremes, looking for the market to return back to center or a full rotation back to the upper area of balance. Breakout rules. We break out above this and we accept we're supposed to go with those breakouts. Either way, the importance of this trend line, which now has 3 touch points, including last night, gives us the opportunity to limit risk against it. Take a look at the 30-minute chart. So here's that trend line that goes back to the 28th of June, goes back to the 27th of June in the Nasdaq, but we've got 1, 2, 3 good solid touch points in extended trading hours at some point. Yes, but that's, hey, what are we doing here? But that's just, that's just how it is now. We've got 24/5 trading. When the market opened last night, it opened with a gap. It closed that gap relatively early, but what do we see happened at the end of the day on Friday? We had a late spike. We closed at the upper end of the late spike, and the base of the late spike is 38.6250. We're going to be opening with a gap. We're going to be opening above the late spike, which is all indicative of acceptance of higher pricing. So if we're going to be accepting higher pricing and we're up against an important level of inflection, this area up here is completely vital, pivotal, whatever word you want to put on it. There's opportunity here. Now, occasionally, sometimes when we get to these situations, the market just kind of sits there and idles for a while, which can chew you up. Be cautious about that. We're opening out of balance. We're opening above a late spike. The opening range trade may actually be something we would want to look at today as long as it's not too big. we get a 10-point opening range. That's going to be a little inhibitive of participating in the opening range trade. So we're going to try and stay patient. Opportunities do come as the day goes on. Sometimes we find the best trade location early in the session when the market opens in its current situation and context. Out of balance in the short time frame, outside Friday's range, at the extreme of a longer term balance, there's some meaty bones up here somewhere. Which side of the horse is unknown. What I mean to say is there's some fish up here. We've got to decide which side of the boat we're going to fish off of. But because of this situation, we can lose a few worms, but we don't have to risk the rod and reel up here. Watch the opening range trade. It could be an interesting one for us today. A lot of it depends on how many people have been focusing on it recently. Here's the crude oil. We've missed the opening range, which I'm kind of bummed about. We've got, in the bigger picture, the market is moving higher over time on the weekly, on the monthly. All of those indicate that the market is moving higher. In the short term, we've got a downside trend going here. We've got lower highs, we've got lower lows. And don't forget, ladies and gentlemen, we should be trading the September contract. Last day for August was Friday. Today we've got much more volume in the September contract, and we can count on the effects of rollover going away over the next couple of days. Still largely in play for us today. However, open interest was lower. Open interest overall was higher on Friday. We lost 17,000. Total, we lost 22,000 in the August contract. So overall, we ended up actually increasing open interest by approximately 5,000 contracts on an attempted move to the upside that seems to be continuing today. This morning looking at this, the price was pretty central inside weekly kickoff level and last week's high and low. We're seeing the market finding some moves to the upside, and this short-term push to the upside here may end up actually looking more like a bear flag if the market can't continue higher. We've got this trend line here. It's got 2 points of contact, not a very strong trend line, but it's something to focus on and to tell us that, yeah, in short time frame, we've been putting in higher highs, we've been putting in higher lows. The opening range looks like it was a doozy this morning, 97 to 74. Huge opening range. Too big for me to try and play, but the opening range remains the low of the session. So it tells me, quite possibly, that we're going to be looking for opportunities to buy weakness as long as that opening range remains the low of the session. We've opened with a gap. We have no effort to try and close the gap, and perhaps we've already missed our best trade location in the bottom of that opening range if we could have got it. That's a huge opening range. I mean, that's 77 ticks. 77 ticks. $770 to try and take this opening range trade. Too rich for me. If we get the opportunity of price coming back into the opening range, the below of it offers opportunity. It can offer a support level if we break out below it and accept. It can offer an area of resistance to look for a trade. Right now, we've probably missed our best opportunity, at least early in the session. Right. Nasdaq, similar but different to the S&P, is lower volume but higher open interest. We actually added open interest. This market is actually presenting as stronger. It's got higher lows, 1, 2, 3 good points of contact. Good points of contact along the highs here, but the market is at a lower level. It's at the 30% pullback off the all-time high, where the S&P's has been wrestling with the 20% pullback off the all-time highs. There's more space to the upside in the Nasdaq, you would think, than there is in the S&P's, but very similar situation. We've got just this 1, 2, 3 points of contact. This one goes from the 27th of June here to here. Up against that level, it offers us opportunity. Let's see what else I had. Early opportunities are likely. Testing the upper balance. We did have a late spike. Opening above that late spike. We even had a weekend gap that didn't get closed in the Nasdaq, where it did get closed in the S&Ps. So we've got a gap to the open, we've got a weekend gap, we've got a late spike. A lot of the nuances are saying that this market is attempting to accept higher pricing. We've got our upper extreme here. We've got a naked point of control. We've got a settlement from here. We've got last week's regular extended trading hour session high. There's a lot of confluence here. There's a lot to be looking at. Of course, we've got the gap. We open with the gap, with all these nuances to the upside. Is it too much? Are we too long to continue? These upper extremes have that tendency to do so. So this area up here, again, vital, important, opportunity to limit risk sometimes in certain spots, and likely to create an opportunity for a move back to the downside or an acceptance and acceleration above. I don't see too much acceleration going on because we've got so much coming at us as far as earnings and FOMC and all of that, but it doesn't matter what I think. We got to trade what we see, and we find a good, interesting level with a lot of confluence here. There's opportunity and there's fish. Just lose the worm, don't lose the rod and reel. Gold. Volume and open interest drop at last week's lows. Friday alone, we lost 6,200 in open interest. That's an estimate. Putting in the low from last week, testing the low from last week. Is this market beginning to create balance or range? We got to think about what direction is the market attempting to go? Well, gold is attempting to continue to move lower. We had senses last week that the downside auction, although still in play, seems to be losing some of its vitality. It's getting old, like me. The loss of open interest on Friday is an indication of that. We lost volume as well on those lows. So it's telling us that the auction to the downside may be tiring, may need to consolidate for a while before we can even out inventories and find a new direction. Seems to be that might be in play here for us today. That we've seen the dollar dropping off since it put in its high on Thursday at about 109.11. It's back down below 108 right now. So we've taken some of the value out of the dollar, and I think that may be, of course, something that's kind of putting this little bump here into gold. Again, direction, downside, performance. Questionable. Take a look at the 30-minute chart. Alrighty. So weekly kickoff high, weekly kickoff low. 1,700. That big fat round number really put in the low of value from last week. So therefore, all of this rejection down below there has me keeping that 1,700 big fat round number as weekly kickoff low. It's a level of inflection. We did not find sellers below it. Have we found buyers above it? Dragging along it for a couple of days. We opened. We did. I don't know if we've closed any gaps. So we had some pretty decent overnight inventory that was really kind of reconciling those longs before the open. No real acceptance back inside value, or certainly not inside value, but just really testing to see if we're going to find acceptance inside the last 2 days range. This is an interesting spot here. The market came up to it. We've got a little bit of a head and shoulders here. If we take out this low here, then I'll look for a potential move back down towards our weekly kickoff low for another test of that. But if we take out the high of the shoulder here, then I think the market is set to continue a little bit to the upside again. We did not see good participation on an attempted upside move on Friday. We lost open interest here, so it's not like there's a whole bunch of money coming in just yet. Here's the euro. With the dollar leaking to the downside, of course, the euro is going to be leaking to the upside. My brother Rick called last week. He says euros too cheap, dollars too expensive. Start buying euros, and he may well have been right. So we saw some short covering on Friday. It's an up day. We lost open interest. So we saw some profit taking, some short covering on Friday, lower volume, indicating that this move on Friday would be hollow for really a bigger move to the upside, although the market is attempting to do so. It all depends on the dollar. Apparently, direction, downside, performance, not so much. Very similar to gold. We've started to find an area of balance that basically inside last week's range where we may find that area of balance. Last week's range high offers opportunity to limit risk. Here's the 30-minute chart. 1, 2, 3, 4, 5. Last week's high is not in that spot. It is up here. There it is. So that's the extended trading hour high, not the regular trading hour session high. We're getting pretty rich up here. We've got an opportunity for us to maybe check and retest this point of control up here before getting to last week's high. This is a target-rich area up here. I'm really liking this area up here for an opportunity. Again, which side of the boat, not sure. I just feel like there's fish there. There's a little shade. Down in there somewhere is a nice whopper walleye. Opening gap, unclosed. Overnight inventory somewhat reconciled. Starting to create that head and shoulders. We take out the low of this. We'll look for a move back down towards settlement to finally settle the overnight inventory. We take out the high of the shoulder. We may see a move back towards the high from last week. Very similar to gold. But where are the buyers in gold? 10-year. This market is frozen in time. We've got just coiling, range-bound, short time frame control, open interest eating balancing area, losing 16,000 in open interest, short time frame balance, short time frame control, a lot of hedging, a lot of positioning. It seems like really early for that to happen before the FOMC meeting, but this market is really just kind of closing in on itself and seems to be closing down for business. Open, we just closed the gap. Again, price relatively central between last week's high and low and our weekly kickoff levels. Try and stay patient. I mean, obviously, the area of balance from last week is last week's high and low. One big volatile day put all those in, and everything else has been inside of that. The extremes for bigger opportunities are at last week's high and low. We've got some confluence up here with weekly kickoff high, which is 119.08. Got a naked point of control up here. We got last week's high. This is a kind of a high target area if we can get there. Low target area. We've got another weekly low and a naked point of control down here. So this is kind of a high target area. Anything in the middle seems random. It seems just short time frame traders picking each other's pockets. Short time frame levels will tend to be respected. The problem with that is there tends to be a lot of them. So try and stay patient or overall away from the 10-year until something changes. I'm back burnering that for myself. And for the natural gas, Friday's rally, hollow, losing 2,900 in open interest. Now that was a breakout above a weekly kickoff level, and it lost open interest. So the upside seems a little bit hollow. There was a little bit higher volume, but nothing all that impressive. We remember that natural gas is coming into rollover, I believe next week sometime. will be the roll date. We'll keep you abreast on that as we get closer to it. But volume we maintains not really all that better. And yeah, again, it is coming into rollover. Take a look at the 30-minute chart here. Late spike. Okay, we ended the day on a late spike. The base of that late spike is $7 even. Basically, settlement. And we've opened above the late spike. We've opened above the last week's high. We're opening out of balance. Anything can happen. Looks as though we've found some buyers here. Where are they going? Well, we got weekly kickoff high up here, $7.64. Nothing on this that we can really see on this 30-minute chart. But I'm going to be looking for opportunities to buy weakness because of the fact that we opened with the late spike and a gap. No gap close, late spike. We're looking for opportunities to buy pullbacks on weakness. All right. So, looking forward to an interesting trading week. We got a couple of questions here that I saw. Toph, yeah, there is a lot of money to be made in micros. Chris, I don't really watch the dollar index close enough to really find anything that I could really trust to tell anybody as far as key levels in the Dixie. It'd be just another product I'd have to do a lot of research in. Grim Reaper looking for a sell-off. It just fits the name. Fits the suit. One big opening range in CL. Yeah, a lot of that is due to rollover. Remember, it's in rollover. I'm not sure that I am able to come up with a date when we are going to be able to trade the micro CL. I'm hoping soon, as everybody. Juan, my pleasure. Emmanuel, what analysis program do you use? Well, right now, today we were looking at the TS Trader or Tradeovate platform. I've got 3 different platforms that I really kind of focus on. But as far as like analysis tools, Market Profile, baby. Market Profile. If you're not familiar with it, come to group coaching tomorrow and ask. Emmanuel, I implore you, ask. Come to group coaching. We're gonna, probably be looking at the market profile in a little bit more detail with regards to some market that's making a move tomorrow. And always look left, my friend. Always look left. Ednelson, good to see you. Haven't seen you in a little while, I don't think. Nice to see you back. Nick, resistance at R2. Phil, good morning to you. Chop up like a goldfish. Yee. It doesn't sound good. Maybe I'm missing something, but all right. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Don't forget to be kind to yourself, be kind to others. Pray for world peace, and see you for group coaching and back again right here for the market recap at 3 o'clock. Looking forward to a good trading day for all of you. Let me know how it goes. Otherwise, I'll see you in the proverbial trading pit here in just a couple of minutes. Get out there and profit today. Trade well. We'll see you later on.